The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Great weekend. I start with the idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. We have the Dow Industrials down 28, NASDAQ up 14, S&P's down $1.50, gold contract down $14.60, trading at $1,224 an ounce. They try to whack gold down, folks, $25. Said, see ya, don't want to be ya, climbed all the way back topside. Silver down 45 cents, traded at $14.72. You got platinum down 12 at $9.14. Light sweet crude off, 20 cents, $32.82 a barrel. Bonds, the 10-year note down 24.6, 130.22. 30-year bond off almost 2 full points, 165.17. King dollar. King dollar up 858 ticks at 98.14. The euro is down 86 at 109, and the yen is trading at 113.89. Our phone number is 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. This is going to be a great hour coming into the close of the day and the close of the week, folks. So we get over to the SPY. Let's go take a look at what we have here. Deviance extraordinaire, there's no doubt. So what we had is this. The SPY yesterday goes to 195.55. You do all of 110 million shares. You get over the swing point, you have no volume. You have lighter volume over the swing. Bottom line, market wants to go higher anyway, okay? That, I suspect we're going to see this 199.83 area. Now, intraday, let's go take a look at this, because I think this is going to be a cool little close out here. And the close I'm talking about is that this thing, I don't see it running to the highs of the day, but what we are going to get, I suspect, is this. Your future right now is at 1948. This thing can get into like 1957 at about a heartbeat. And this would be really wild watching how this thing shakes out coming into this close. So, because this is what we had. What the market's been doing all day out here, folks, is this. Market pulls down. It was pulling down into where we went topside yesterday at 10 minutes of 4. That's the bar that you've been going into all day long. 1943 is the low of today. 1948 is that bar. That bar had monster volume. So whoever was buying at that bar, guess what? Comes back down there again today. They're buying at that bar. And I suspect what they're going to do is juice this thing right at the very end and just basically twist a few minds out here. We go take a look at the NQs. Same setup in the NQs. NQs right now are at 42.42. And mind you, this is a counter trend bounce. So this is it's going to be a monster downdraft. But the bottom line is that this market wants higher price right now. NQs. So what do we do at the NQs? Same bar we're dealing with. The bar we're dealing with is 10 minutes of 3 from yesterday. That low out there was 42.27. We get to 42.25 today. Bottom line, the first time that we got any juice on the upside was right when I was getting on the air. So now we'll see whether they can get any follow through. In the futures market, you just did 7,100 contracts. And not that that's huge, but compared to where we were all day, it is. The NQs would have to get over 42.47 in order to get up into those higher areas. Now, let's go to the gold contract. What do we have with gold? This is about as good as you can get in a gold contract, especially on a Friday, folks. This is what you had. Gold contract out here this morning. They smoked the gold contract. What they did is that they come up with new margin requirements, because that's a legit deal, too, by the way, because the volatility's been so dramatic. Gold moves down to 1212. Guess what? Has 205,000 contracts. Does not get to the swing low. Has lighter volume. Rejects lower price period. And we're at 1225.30. What this sets up, this is the building cause, folks, to get up into and over the 1263 level, which was the February 11th high. That's the way this baby is setting up. Nice little setup, by the way, too. Bonds. Let's go take a look at the bonds. So, bond market out here, what you have is this. If we take a look at the 10-year first, what you have is that 10-year comes off its highs today. We've done 1.1 million contracts in the contract that's last day you're going to be trading. This contract is on Monday. Now I'm going to switch over to the new contract, okay? So this one had 1.1 million contracts. We go into the M contract, and what you're going to see here, the M is down 24 ticks also. Did another million contracts there. So we get some volume coming into this lower consolidation of the bonds. What I expect you're going to see is this. We're at 130.10. Next move is going to be 129.26. It looks to me like these want to pull back into the area of 128.21. And the correlation there, too, by the way, you know, if you, this morning, Larry, myself, Joey from Hong Kong, we were on John Logan's show this morning, and I was talking about the correlation. It's really a tough spot right now inside the correlation, because I think bonds are going lower, and I think that's a real move. And what you have is that I suspect that the market's going higher, but yet that's not a real move, meaning that that's a counter-trend bounce. Bottom line, you know, because the fundamental correlation, folks, is that when the markets are going down, bonds are going up. So we'll see where this shakes out. But that gives me the idea and the understanding also that this counter-trend bounce is not over. You know, that's the way that I'm looking at this whole structure right now. Oil, let's go to the oil market. We take a look at oil. What we had with oil is this. Oil gets into a price point today to a high of 34.69. We're at 32.97. We did 578,000 contracts. That's plenty of contracts, folks, to get right back topside. What I expect you're going to see next week, oil's going to be running into this 36.28 area. And if we get the same type of volume that we have the last 3 days inside the oil market, well, guess what? That oil contract can get into 39.31 without, you know, basically a lot of movement. You know, that's really just like a dead cat bounce. That's what that comes down to. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now are down 43. Nasdaq's up 12. S&Ps are down 250. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 46. You get the NASDAQ up 11. S&Ps are off 3.5. And as we do each and every Friday at 20 past the first hour, we have our man, Mr. Steve Rhodes. Don't forget, folks, every trading day at TFNN, we start live programming Monday, Wednesday, Friday, 8 o'clock in the morning or 6 o'clock in the afternoon. Tuesday, Thursday, 7 in the morning to 6 in the afternoon. Get it right on your cell phone, TFNN.com. Just hit Tiger TV. Steve's got an outstanding show every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter. It's Mastering Probability. Now, the way you can test drive that for a month, absolutely free. You get the weekend to look it over. Come over to our website at TFNN. Go to newsletters. Go to trading newsletters. See, you can test drive Mastering Probability 1 month, absolutely free. Steve Rhodes, what's going on?
Well, we got lots to talk about.
That's a beautiful thing.
Yeah, where do we want to start? And the first chart, Tom, that I've got on my screen is the top portion of it is the ES minute. It's just a 1 minute chart that I have up on my screen, but it's really to make a point as to what's going on inside the market. The bottom is light sweet crude. Now, I have previously done studies that takes data back into 1985, I believe, to take a look as the discussions on the tube were, hey, the market, if oil's going down, the market's going down, to see if that correlation really was out there. And it didn't ferret itself out. But, you talk about how a market can talk itself into something, self-fulfilling prophecies. When we take a look at where we're at right now with regard to the way the market is tracking, it is almost, tick for tick. Obviously, it's a 1 minute chart that we have out here, but you can see the directional correlation, and there's no escaping it as we speak right now. Now, I was with some folks a couple of nights ago for dinner in the business, and they told me that they had done some studies that the correlation between light sweet crude when it traded between $30 and $50 was really significant. So I always like to go back and prove the data myself, and I actually just finished doing it. Now I only was able to go back to 2002, but that's plenty of correlation. That's 13, 14 years worth of data, and the interesting and so. This and the
we missed them. Okay, he'll be back. He'll be back. We will get him back. So market-wise, as we come into this close, let's take a look at some of the higher volume stocks in this market. As soon as you get them, just put them right on. You get Freeport McMoran up 32 cents. You have, you there, Steve? No, okay. We got J.C. Penney up $1.30. We have PepsiCo is up 21. You got Transocean up 39. We take a look at some of these Dow stocks out here. This is what you have inside the Dow Industrials. E.F. Hutton cut them off, yeah, no doubt. So we got Caterpillar is up 45 cents. You get Boeing up 120. The GM is up 75. If you want to see something that it really doesn't matter in the longer run, what ends up happening, you know, as to who's promoting the stock. Weight Watchers. This Weight Watchers here, folks, is a great lesson that. Bottom line, stay with technicals in a big way and stay away from the pump and dump. So Weight Watchers is down $4.29 today. You're at $11.26. You know, this equity went to the moon. The day that Oprah came out and, you know, she's going to be the spokesman, bought a lot of shares. I believe they gave her a bunch of shares also. Weight Watchers the night before was at $6. The following day, it's at $15. 2 days later, it's at $19. And 1 month later, it's at $28. Well, guess what? That was November 19th. We're back at $11.27. That's the first part. The second part gets a little bit more intense. And what the second part is that you're not only back at this level, but now the gap that is wide open from when the announcement was made. The announcement was made on the 19th. Bottom line, this is going to go all the way back into that gap at that 693 area. Disaster. We got our man, Mr. Steve Rhodes, back. Okay, brother.
Hey, sorry about that.
That's all right.
So we're not going to let anything get in our way. So here's the bottom line. What I found out is the correlation between when light sweet crude trades between $10 and $30,
yep.
It's really only about it's less than a coin flip. It's about a 47% correlation.
Okay.
Meaning light sweet crude goes up, the S&P goes up, or light sweet crude goes down, the S&P goes down. What's interesting though is the largest correlation price point with regard to light sweet crude in the market is between $80 and $100. It's like 65% out there. But the reason that I wanted to, now look, the correlation is out here. I don't know what it is that's going to break it apart, but it was really helpful for me to be able to do that because, you see, I am on the side right now, as you are, looking for when is this counter trend going to end. And so in my mind, I'm saying, because I'm taking a look at the possibility that light sweet crude has actually formed a significant bottom. I'll have a confirming signal on Monday when the month of February comes to an end.
Yes.
But it looks to me like as I take a look at long-term monthly charts out there, it's got two beautiful patterns. And if it actually confirms with a hammer candle on the monthly basis, and at least says that, hey, light sweet crude may have put in a significant bottom. Because if that correlation was going to be there, truly be there in a significant fashion, and light sweet crude was going to trade between $30 and $50, you know, I then had to put my thinking on and say, hey, maybe the market has made more of a significant bottom than I'm giving it credit for. So I don't think so. Here's what I know right now. I don't know if you guys still have my screen. I hope that you do. But
yeah, the screen is up. Yes, the screen's up. Yeah.
Okay, perfect. Okay. So there's when the market, now I'm looking at the NQ right now. When the NQ formed a bottom, this is back at 9 o'clock in the morning on February 11th. So I'm just going back to our most recent bottom out here.
Yes.
It had one of my favorite patterns because it's called all of the major market tops on monthly charts, weekly charts. We're just looking at a 5-hour chart here right now. When price moves lower, does it with less relative weakness out there, and then we get our nice little bullish reversal signal. Now, in this case here, it's a 3-candle signal. It's referred to as the morning star. Well, guess what? Today, as we came to the 9 o'clock open inside the NQ out here, prices moving higher, due to less relative strength out there. And as we completed the 2 o'clock session, the exact same candle pattern, the exact same strength or weakness pattern formed right at that top. So I'll need really the first 5 hours of Sunday night to confirm this pattern. But what this is telling me, at least inside the NQ, and actually, Tom, this goes across all of the 5-hour charts I look at, it says that the top is in. It says the top of this counter trend rally is in. And I know that's a little different than what you're looking at, but we're really just splitting hairs here. We're both just looking to try to identify when that top would actually form.
Which is really dangerous for all of us.
Well, that's why I really wanted to go back and take a look at light sweet crude and said, well, wait a minute, because the information I was getting was between 30 and 50 bucks. Light sweet crude tracks the markets really well. So I'm sitting here saying, well, wait a minute. If light sweet crude is putting in a really major bottom here, I might have to shift my thinking. But I'm not shifting my thinking right now. I think there's a top that's real nearby.
So folks, come over to our website at TFNN. Go to newsletters. Go to trading newsletters. You can test drive Mastering Probability right now, 1 month, absolutely free. Steve, have a great weekend, safe weekend.
You too,
Look
Tom.
forward to the show Monday.
Take care. Bye-bye.
Stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You have the Dow down 55, Nasdaq's up 7, S&Ps are off 4.5. Let's go to Seattle. We have Dave in Seattle. Hey, Dave, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. Yourself?
Pretty good.
Cool. What are we going to look at today?
GSS?
GSS. Let's take a look at it. You get Golden Star Resources, folks. They do business in West Africa, gold company. The low is 13 cents. The high is 41 cents. That's today. Okay, so what are we doing?
I'm in at 30 cents. I was just wondering.
Okay. So we're at 41. You come off the low of 14. Nice move like the rest of them. 41.90. Okay, so what you're gonna do here is that you're gonna be right at the swing high from the week of May 15th of this year. And what you want to see, you want to get that overtaken. Let me just put this back a little bit more. Put it back 4 years. Okay. Okay, so, well, this is good right there. Yeah, I mean, this looks like it's going to be pretty clean, taking out the 41. So 4192. What happens, folks, there's 4 digits in these when they're trading like this. It looks like it's going to take that out. Now, if I put this on a monthly, the monthly looks good, too. So the monthly is coming in with volume, too. We're at 49 million already in the monthly. Last swing high was 38. That's good, man. So I'd say the next run on this gets you like 55, where I'm going with that. Let me just see this one. Oh, I see. Interesting. Okay. So, yeah, you already made it by the 40 cents. It looks to me like you're talking 55. Where I'm going, Dave, is I'm going to the lows of March of 2014. That's how it looks like it's set up right there.
Oh, okay.
And what does happen, folks, when we're talking these penny stocks like this, that, you know, when we get some calls with penny stocks, I want to show you the difference. Now, this is a stock that was 14 cents. Now it's 41 cents. But guess what? This is a producer. I know this company pretty well. 255 million they take in. That's the type of stocks that you want when you're looking for penny stocks. That's, you know, and what happens is that these gold and some of these silvers can go down to pennies. I'm not sure whether this company has any debt or not. You know, Great Panther doesn't, but you know, you get some action here, man. I mean, the hardest thing right now, because of the runs have been so extraordinary, Dave, is that, you know, like, these corrections can come out of nowhere. Like, here, I'll show you something with Gold Corp, folks. You know, we owned Gold Corp in the gold report. Had the run. I says, you know what, man? And this is where the price and volume come in. This thing was dying on the vine up here. You know, we sold it last week, and bang, they come out with numbers. It's down $2.17 with volume. So this is going to be a bigger correction, man, for Gold Corp. So I would just keep your eye on, you know, right now the volume's great on it, on the daily and on the monthly. I mean, so that's on the weekly. Well, in this case, it's good in all of them. But we know that they're parabolic. You know what I mean? It's like, okay, man, you know. But, you know, what the physical gold market did today was dynamite for the equities. The physical gold market didn't even get to a lower swing point. And if you don't get to a lower swing point, folks, and, you know, they're trying to push it down, that's a huge plus, man. And they rejected lower price. You know, so that setup there is saying to me this run's going to continue. Cooking, brother.
Thanks, Tom.
Okay, man. Have a great one. Have a safe one. And, folks, if you would like to test the gold report, you can come over to our website at TFNN, go into newsletters, go into investments newsletters. You can test drive that 30 days absolutely free. Not a bad time to do it. And it's not like there's going to be buys in there on Monday morning either, folks. You know, but you get used to it. This run has been extraordinary, no doubt. You know, and there will be pullbacks. If we look at this contract, see, when I look at this contract is saying to me, though, that this thing will not pull back, number one. We've had the price spread. The price spread's been pretty amazing, meaning we had the trading range. We went from 12.12 today to 12.41. You know, a few days ago, last week, we go from 12.01 to 12.39. It's pushing in $45 increments every day. But when I take this and you put this on a continuous contract, what you're looking at is that, you know, the next stop, you know, 13.92. And not that that's a lot from where we are. You know, we just came off a low, and that low, we had a low right January 1st of 10.56. So it's like we've already popped up $200, and if we went $200 from now, you're 14.23. I'm saying 13.92. So that little baby looks like it's going to be not only out there, but I suspect how we get up there is going to be the important deal. Because what we did have is that the actual equities The gold equities are the first ones to take off. In fact, I want to just look at this for a second. Yeah, see, iron ore is next. If you look at Valley, V-A-L-E, this baby is also setting up for a little rocket ship. This came off a low of $2.14. You've had 3 separate signs of strength on the way up, got up to 334, pulling back with lighter volume again. You know, this is telling me that what we have going here, folks, is that we're at the beginning of a commodity run. That's the way that it looks. That when I take a look at the whole aspect of where we are right now, the silver needs a bid, man. I mean, I'm not quite sure why silver can't catch a bid. You know, silver came down hard today. You know, 0 volume, by the way, though. I do like to see when there's price destruction and there's no volume behind the move. That's a good scene. Price-wise, it's not a good scene. Other than that, though, it's a great scene. 22,000 contracts we did today in the silver market. You're going into 65,000. It's an illiquid market, and silver they can seem to really whack it. What they didn't get done, even in the context of whacking silver, if you go over to Great Panther, guess what? Silver stock, bottom line, that's down 4 pennies. No big deal. You go to First Majestic. We take a look at First Majestic. That's actually only off a penny. That went to a higher high. You go to Heckler. We take a look at Heckler. Heckler is flat. You know, so they got to basically hit the silver contract, not the silver equities. And is that a difference? I've found that that's a difference in the context that these equities are leading the physical market. Now, let's go over to the dollar, because the dollar, DXH6, the dollar has caught a bid out here today, still with no volume, but it held price. So if you hold price, you don't have the volume, guess what? You can still go higher. You know, we're up 813 ticks. You've done 26,000 contracts, and you're coming into 60,000 contracts. You know, so that's saying that, you know, guess what? That dollar can get up to this 98.45. It hasn't seemed to affect the gold market, you know, because the aspect of we're down $25, then we only end up being down $12 or $14 right now. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now down 45. Nasdaq's up 9. S&P's are down 3.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And folks, if we go over to the transports, so check this out. The transports are trading at 7,400 right now. Now, the transports went on a one-way binge. When we take a look at what the transports have done, let me just bring this. I'm going to bring this back a couple of years. And the reason I'm doing this, folks, is that I heard this morning that the transports are no longer in a bear market. Well, I disagree with that, and I want to show you why. So the transports had a high of 9,310. That high was established in 2014. It goes all the way down to 6,400. Big move, huge move, right? Okay, so now let's get a little bit closer. When you get a little bit closer, the correlation would go like this. The correlation is that you came off the bottom, January 20th, that was 6,400. Now, it's at a nice run from a lower number. 6,400 to 7,400, you get $1,000, right? Bottom line, you have any juice beside the move? And this is a typical counter trend bounce, folks, and it's actually right up to ice. If they, read anything about Wyckoff, well, I wouldn't expect them to do that. But bottom line, this is a normal up move in a market that wants to go lower. Now watch when I put this. I'm going to take this and I'm going to put this on a 10-year monthly. And what you're going to see is that we had highs established with very light volume, 276 million on a monthly basis. We came off that, and we came off with 357 million. You came off with 337 million, and then it just started expanded even more. You expanded to 357 million, and then we have a low that's established at 468 million. Okay, so what's the kicker? The kicker is this is a high volume low that hasn't got tested. That's the first part. The larger part, though, is this. This looks to me, when you correct and you come off highs after you've had very light volume and distribution for a long period of time, which the transports did. The transports went sideways at the highs for about 6 months in 2014. Then you come off the high with volume, have an expansion of volume. What you normally do, folks, is you go back to the last place where there's any volume. And on the transports, meaning on the way up, on the transports, that's 5,237. So take that with a grain of salt that the transports are in a bull market. It actually blew my mind that the transports are in a that they said transports were in a bull market. It's like, okay, that is evidently a different type of bull than most of us are used to. So, market-wise, what are we looking at out here? Bottom line is that you've had a sideways market out here today after going up with dramatically lighter volume. I expect what you're going to have out here today, more than likely we're going to have light volume once again. Yeah, it's not going to be bad, actually. It's going to be, it might come in at $1 billion, 950 million to $1 billion. Now, if we take a look at this on the weekly basis, and what's going to be really cool is that we're going to be able to do the weeklies, and of course on Monday, you're going to be able to do the monthlies. On the weekly basis, what you have is this, is that your swing point that we're dealing with is 194.58. So the SPY's over that right now. So you have lighter volume, but bottom line, you're over it in price. Over in price means what? You go to the next level. Next level up there is 201, and we're at 195. NDX 100. What do you have with the NDX 100? Same type of setup in the NDX 100. We're at 103.53. We take a look at this, and we put this on a weekly. And what you have on a weekly there is it hasn't even hit the swing high yet. That's 104.80. I'm going to go back to the SPY for a second and put this on a monthly, because we're going to actually be able to get a decent gauge on a monthly as to what's happening too. So we take the SPY and we put it on a monthly. Oh, this is where it gets interesting. Oh, baby. Okay, so check it out, man. On a monthly, this is what you have. This is a test of the lows. We're going higher, man. Okay. If you remember the October 14th low that I was looking for that test for, what, 8 months. We finally got the test. That low was 181.92. Market goes sideways. It comes down in August, gets to 182.40. That's the test of the October level. That we had 3.7 million shares. Last month, we did 3.7 million. This month is going to be a test of those two areas. This is pretty cool, actually. It's going to be a test of those two areas. It's going to be a rejection of lower price on lighter volume, and guess what? That sets up a run to that 201. And we haven't got volume on the way up, but this is what's cool, folks, is that when you take a longer-term chart and then you try to develop the theory about, okay, where are we? So that's on the SPY. So the SPY is saying, guess what? The bull suit of mine is going to basically stay on for a little bit longer. That bear suit with those golden buttons are going to be coming out, but bottom line, it's not coming out right now. The Qs, what do we have with the Qs? The Qs, we take the Qs. I'll just cut to the chase and put those right on the monthly basis. On the monthly basis on the Qs, the October low generated 1.2 billion shares. The August low was 1 billion shares. Last month's low was 1 billion shares. And this month, see, this is where it's going to go. So check this out. So this month, there's some divergence. This is pretty cool, actually. The NASDAQ, the Qs, very well could do the same amount of volume. So there's the correlation that the Qs could come back and hit. And that's divergence in the marketplace, because my overall deal is that so we're still going back down. Now let's do the IWM, the small caps. Small caps are trading at 103.17. We take a look at the small caps. The October low was 103.54, and you had 1.4 billion. You broke that with 1 billion, and this month we did 780 million. So the small caps are also saying that we're going to get a bounce first before we come back into lower price. So when you start putting those together, and then if we go over to the bonds finally fell apart. They not fell apart. They come down hard. If we take a look at the TLT, what you're going to see is that TLT is down $1.14. You get 7 million shares traded. That's 7 million. Let's go see what this looks like on a weekly basis, actually. Oh, this is pretty cool. So on the weekly, what you get, you actually have a test of the high on dramatically lighter volume. You were testing 77 million, and we did 35 million. So that's first off the test of the high, which was 2 weeks ago, with lighter volume and 129.68. Let me just see this for a second. So yeah, it would have to get down to, for a total rejection of price, it has to get under 129.68. That would be the low of the week of February 12th. You know, we've definitely rejected on lighter volume at this point, but we need both of them. Thus far on the monthly, we've done 35 million versus 77 million. Oh, that's the weekly, right? So weekly. On the monthly, let's put it on the monthly. Oh, look at this. So on the monthly, you're going into 200 million, and you've done 209 million. This is Tom O'Brien. This is TFNN. You stay right there, folks. You're going to be coming right back. Dow Industrials right now are down 37. NASDAQ is up 12. S&Ps are, where are those S&Ps? Down 250. We're going to be right back, folks. You stay right there.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 35. Nasdaq's up 12. S&Ps are down 250. And you get Dow Chemical out here today settled a big lawsuit. So Dow Chemical said it agreed to pay $835 million to settle an antitrust case pending before the United States Supreme Court. And one of the, well, this is the news saying the reason that they're settling is that they felt that their chances came down after Justice Scalia passed away. The chemical giant had already, they lost every case going up right up to the Supreme Court. And the award was $1.06 billion. And what it was a price-fixing award, I believe. The company disputed the jury's findings that had conspired with 4 of the chemical makers to fix prices and asked the Supreme Court to take it on to take the class action on appeal. You know what's amazing, folks? What always blows my mind is that a company can pay a fine of $835 million and still be in business. It's mind-boggling. I mean, the banks have done it in an incredible way. They've paid just billions and billions and billions of dollars. You know, it's like, okay, where do they stash all this away? You know, it certainly doesn't come out to the shareholders. But what it seems to do on a continual basis, well, I guess I can see that. That's nothing. You know, so yeah, Dow Chemical's a monster. So listen to this. Dow Chemical takes in $45 billion a year. So what is that? Just $900 million. That's a week's gross earnings. gross revenue. So that is nothing. Wow, amazing. Some of these companies are just monsters. Let's go over and take a look at the XAU, the HUI coming to the close. XAU, they couldn't back that off either. We're at $61.97. That on the daily, on the weekly, on the monthly, this is something that wants a much higher price. The monthly thus far, just so you know the type of buying that we're talking about, we've already done $971 million on the monthly. That has taken out everything and still got one more day. The XAU is laying out here at 61. Looks like it's going to run up to the 81 area. We go to the HUI, the Gold Bugs Index. We take a look at the Gold Bugs Index. What we have with the Gold Bugs Index, that is trading out right now at 161.69. You put that on a monthly basis, and we put the volume right underneath that. And what you're going to see there, also monster volume. Thus far, we've done 564 million. This, they were at 161. You got game on to 211. The thing that's going to be really wild is that at those numbers that I just gave you where I suspect they're going to go, what you're actually going to see, if in fact they get there, which they can get there pretty easy, is that in a matter of like 2 months, the gold market has taken back, meaning just eaten through a supply line, because there wasn't a lot of shares there evidently, from June of 2013. So you're talking about, by the time we get to June of 2016, the gold market will probably had, in 6 months, taken back 3 years. It's pretty intense. And I suspect that is where the 1392 is laying out. That's where the XAU, the HUI want to run into. And that is where you're going to see the bullishness all over the place. And more than likely, that is where you're going to get the first pullback in that market. Now, if we go over to Rango Resources, which has been the strongest gold equity, bottom line, Rango looks to me like it's set up to take out highs, folks. And that's going to be about, well, first off, it's set up to test its high, which is incredible in itself. Rango's high is $127, and we're at 89 right now. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Look forward to speaking right back here Monday morning, 8 o'clock. Go get them, folks.